Joining us right now is Mr. Rajesh Agarwal. He's the head of research for AUM Capital, and Kunal Bothra is with us in the studios. Good morning to both of you, and thank you for being with us. All right, so let's begin with a question that we are getting on the phone line. I think we've got Manoharan joining us from Chennai. Hi, Manoharan. How are you doing today? And please go ahead with your question.
I'm fine, thank you, ma'am. I have 200 shares of Awfis, Space Solutions. It has given a very good result. All along, if you see last 8 quarters, the profit is increasing, ROCE, ROE, everything is good. But the stock is not moving. The 52 high is around 600 rupees. Now it is hovering around 270, 265. So what is the issue, or it will go to the 52-week high, or what shall I do? Thank you.
All right, so that's a pretty broad-based question. Rajesh, would you like to begin first, and maybe we can go to Kunal after that, because I think he also wants to know whether he should accumulate more at the current price.
Good morning, Ankita. Good morning, Kunal. AWIFS space, basically into co-working space kind of business, which is going on. There are 2-3 more companies listed in that space. They have seen good listing, and at that time, 52-week highs were made. But now, since the market has corrected, these stocks have also corrected. The valuations are now on a comfortable level, I would say. Where previously, they were very stretched. Going to those levels, I think that's a very long call. Maybe 2-3 years down the line, nobody knows if the numbers are pretty good. Occupancy levels go up. These things can happen. But those levels, I don't think one should expect in the near future. Maybe around 290, 300 odd levels in the next 1 year is quite possible. So at this point of time, I would say it's a hold from our side.
Okay, and Kunal, what's your sense on this one?
Well, I think the stock is into a major downtrend. I would believe that it continues to show signs of underperformance. There could be a scope, there could be a bounce back of sorts on a short-term basis because of that steep correction the stock has gone into. But largely, I don't think so that the longer-term trends could revive anytime soon for the stock price. So you may either want to hold on to the stock price if your time frame is 2 years plus kind of a time frame. But I think if you're looking at it as a very short-term kind of a play, then I would sense that you should use bounce back closer to your cost price as a point where you can look to exit the stock.
Perfect. Let's move on to our WhatsApp questions now. This is Mr. Mahesh from Karnataka, and the question is on Titan. Entry price is 3532. Time horizon is long-term, and well, he still wants to know the near-term targets, if at all Kunal can guide him. But let's take a fundamental take from you first, Rajesh. He's already in profits. 3532, good buying level?
Strong company, I would say. Good buying levels, hold for a long term. They're doing very well. And despite the kind of gold price fluctuations which we have witnessed, this quarter numbers were very exciting. And not only the jewelry business, even the IVR and the watches business have done well. SSG has gone up. Margins are expanding, and with the kind of festival and marriage season going forward in the next 2 quarters or so, I think numbers would be even better going forward. So it's a hold from our side. Any dips by around 5% from the CMP can be a good buying opportunity too.
All right. Our recommendation is to accumulate more, and we've seen a 20% jump, Kunal, in the last 3 months. Kunal, what would be the exact buying price if at all one wants to buy more? Or maybe initiate the first chunk of their investment in this?
I think since the viewer is holding on to the stock price, I'll suggest to continue to hold on to the stock. I think it's done very well for itself, especially at the point when in 2025, gold prices had shot up towards a point when the stock was, I think, at 3,000, 3,300 levels, moved up closer to this 5,000 plus mark where it's trading right now. But I would also think that I think it's a good time to try and take out maybe partial profits over here. Even if you're a long-term investor, because it looks like that the stock is showing some bit of divergences on the monthly and the quarterly chart in terms of indicators. So that, I believe, could probably cap the upside for the stock for a long period of time. So I would suggest that you can hold on to a major quantity, but a balanced quantity or a decent part of the quantity, I think you should try and book profits at higher levels.
All right, the next question coming in from Pankaj. He's writing in from Faridabad. The stock in question is Jio Financial Services, and the quantity that he's purchased is 1,200. The entry price is 356. He's looking at short term, wants to know should he hold or exit. So, Kunal, do you think it can break out of that zone?
It's a very big question mark, frankly, Nupur, because the stock has been a huge underperformer with respect to the peers on the large cap front, or with respect to the entire financial services basket. I think this has been one stock which has been a gross underperformer. The bigger worry for Jio Financial on the charts is that the stock is unable to break past about those long-term moving averages. So the question over here is not that the stock would come back towards 350 mark. The question over here is how much time the stock would take to try and come back about those 350 levels. That I believe could be a bigger concern. So if you're okay holding on to the stock from a long-term perspective, then continue to hold on. But from a short-term perspective, I would sense that the stock can continue to underperform. And in that sense, it's better to switch to other better peers like Bajaj Finance, Finserv, L&T Finance, Shriram Finance. They are better names on the short-term basis.
All right, so that's a near-term outlook as far as Jio Finance is concerned. But then it's time for a short break, and post that we continue answering your stock-specific question. Welcome back. You're watching Buy Now, Sell Now. We're answering your stock-specific questions. We are joined by Kunal, Bothra, Rajesh Agarwal, our guest, who are answering all your stock-specific questions live. And the WhatsApp question coming in from Mr. Sunil Kumar. And Anant Raj is the stock that he's bought. Entry price is 650. And he wants to know for how long can he hold and what could be a medium-term target. Kunal?
So I would suggest to hold on to the stock. I think Anant Raj is going through a range shift. After a spectacular 10x rally or a recovery for Anant Raj from those 2020 lows, when the stock was almost at 80-90 rupees towards 900 plus, which had reached or achieved in 2024. The stock is going through a major range shift where the stock is going through a price-wise and a time-wise consolidation. I think it's a good price where you've purchased into. If you're looking at this as say a medium-term time frame, which I would probably keep it say at least 1 year plus for the stock price, I would look at least 800 to 840 as a potential target range in that kind of a time frame.
All right, so the next question coming in from Vinay. He's writing in from Bangalore. The stock is HDFC, quantity of 100 shares. His entry price is 780 and wants to know if he can increase his holdings. Rajesh, perhaps he's wanting to be able to margin it out. What's your sense on this?
See, the stock has highly underperformed since the merger took place. Despite being one of the largest banks across the world, doing very well, consistent growth, asset quality good, it has done nothing on the stock market. Rather, it has shown 52-week lows. And the kind of downtrend it is there in the short term, maybe it can touch to 700 odd rupees too. That won't be a surprise. But yes, for a longer term horizon, by long term, I mean at least 12 to 18 months, this gives a very good opportunity to accumulate for long-term investors. So if you are a long-term investor, this is a very good price point to accumulate.
Okay. Next question is from Deep. He's from Dubai, and the stock is NMDC. Entry price is 84, and time horizon is only 1 to 2 months. Kunal.
So I would suggest that let it come closer to your cost price, or maybe around 85, 88. That could be a point where I would consider to book profits. The only problem with NMDC is that the time-wise consolidation for the stock price is quite extended. For example, the last 2 months, the stock has been stuck into a band of 82 to 88 approximately. So I would suggest that closer it gets towards 88 mark is where I think it's a good ploy to try and book your profits out, and then shift on to some other metal stocks. If you are looking to switch out from this name to the traditional metal pack, I would recommend something like Tata Steel or maybe Hindalco at the current levels.
All right, another question coming in from Chennai right now. Karthik writing into us, and the question is pretty broad-based. Wants to know, can he do a fresh buy on Reliance Industries and ITC? He's looking at it for the long term. Rajesh, would you like to help him?
Both are a very strong buy from our side. Taking one by one, Reliance, the numbers have been pretty good, not only in the oil and gas segment, but also from the retail format. They're doing very well in the FMCG too, which has been a newborn baby, I would say. In the last 2 years, it has grown very well. Reliance retold 20,000 odd stores. Jio platform is doing well. Jio platform again, the IPO is due anytime soon. So everything is in the favor. I think Reliance is a very strong buy from these levels for a time horizon of at least 18 to 24 months. ITC, another story which I have been advocate since decades, I would say, on your channel too. Strong company doing well. FMCG is gaining strength despite price hikes. Cigarette volume has gone up. It's just a matter of time when further hikes take place. They are moving into dairy to a debt-free balance sheet, and the dividend yield itself is above 5%. So on all parameters, these two stocks are very fundamentally sound and can be held for a long-term portfolio.
All right, so that's the take. RAL and ITC, definitely, it's a long-term hold that's been recommended. Okay, let's move on. And the next question is coming in from Nitin, and he's from Nasik. And okay, so he's bought two specific stocks. He wants OneSource Pharma at current price for medium term. And is that the current rate, is that right to enter? Kunal, I think I'll come to you for this.
Yeah, it's a good stock. The charts are consolidating around the 1500 levels, which is apparently the very good support point for OneSource. Over the last, I think, 2-3 months, the stock has been taking support at 1500 levels, bouncing off towards 1650, sometimes 1700 mark. So if you're looking at this as a short-term play, I would believe that it's a good strategy to try and look at OneSource, but then keep it, target-oriented. So, for example, 1650, 1700 could be a target range which you can assign for the stock.
Okay, so Siemens India also is his stock that he's invested in. 1295 is his buy price. Kunal, again, medium-term outlook.
So again, a decent chart. I think very recently is where the stock has gone through like a 15-20% correction from 1600 plus levels. It's come back towards 1200 mark, now trading closer to 1300 levels. So which means that 20% correction has happened for the stock, and now it's trying to make a bounce back. There's one resistance around the 1400 levels for SEM India, and that I think is the 50-day moving average for the stock price. Once it scales past above 1400 levels is where I believe the stock can make a comeback towards the previous highs of 1600 plus mark. So if you've already purchased at lower levels, I would suggest to hold on. Just watch for this breakout above 1400 levels. Whenever that happens, I would sense that the stock can come back towards 1600 mark, which could be a good target which you can probably potentially book your profits.
Well, thank you for that, Kunal, but do stay with us. We slip into a very short break, but keep your queries coming. We will be taking more of those when we return after a very short breather. Stay with us. Thank you very much for staying with us on ET Now, and we are continuing to take your questions live and straight off to a question that we are getting from Chennai right now. And the question is coming in from Shankar. The stock in question is KPIT Tech, quantity of 100. His entry price is 901 rupees now. He wants to know what should he do now. So, Rajesh, do you think it's going to come back from those levels? What are the fundamentals looking like?
See, the valuations were stretched at one point of time when the stock was running like anything. They're basically into automobile software and doing very well with the kind of growth traction which we are witnessing. The auto space company like KPIT, Tata Tech, they are going to do well in the long term. At these levels, I think all the negatives have been discounted. The valuations which were stretched has come to a comfortable level. So one can continue to hold at these levels.
All right, continue to hold at these levels. Next question is coming in from Arvind, and he's from Chennai. He's got two questions. One is on CG Power, other is on Cupid. CG Power is at 780. He's bought. Time horizon is 2 years, and Cupid 1500. Price is 222. Time horizon is 1 year. Rajesh, do you have these in your radar? CG Power 780, and time horizon is 2 years.
CG Power, after Murugappa Group took over, has done very well. They're moving into semiconductors too. The order book is very strong. The numbers have been quite exciting. Although the valuation at this point of time seems a little bit stretched, but for a long-term investor, I think it's a good stock to be in. Cupid is a highly overvalued stock, I would say. The kind of valuations it is getting, it's mind-boggling. So we are at loss of words to how these kind of valuations can be justified. On a fundamental basis, it's a sell.
All right, it's a sell. What about Cupid?
I'm talking about Cupid only.
You're talking about Cupid now. Okay, all right. So Cupid is a sell and CG Power definitely a hold. Kunal, let's take a tech check also from you. Cupid, do you think its valuation is really not right now?
See, I think it's completely overbought. The stock on the weekly charts, monthly charts, quarterly. I mean, for 6 consecutive quarters, the stock has moved up very recently. And the last 6 consecutive quarters, the stock has moved from 70 rupees to almost 300. So it's almost gone up 4x, 5x in the last 1.5 year. I don't see the stock showing any kind of a major upside over the near to medium term. There could be a possibility that the stock may go into a volatile correction on the downside. So I would suggest an avoid on Cupid. But yeah, CG Power is something which looks attractive. The stock has gone through a decent time-wise and a price-wise correction also in the last 1.5 year. I would sense that the stock at 850, 900 zone could be an attractive bet from a long-term perspective.
All right, going on to a question that's coming in from Naveen. He's writing in from Chennai. The question is, should I buy MV photovoltaic power at the current levels for the long term? Kunal, what would you suggest to him?
See, the data history is limited for the stock. It's just maybe, I think, around 9-10 months of the price history for MV. But I think looking at the chart pattern so far on the last 8-9 months, it looks like that the stock is showing up a decent price structure. It's not very volatile as compared to maybe many of the other recently listed names. And the good part is that the volume patterns for the stock has been a lot more consistent with the price uptrend. So far it looks attractive, but difficult to project it on a long-term basis.
Mr. Viju Phillips from Muscat wants to know about Lupin, and entry price is 2,200. Wants to know if he can hold it for some more time. Kunal?
Well, I will suggest to hold on to the stock as of now. It's completing a mean retracement. It's come back towards the 200-day moving average. There could be a scope where the stock may drop another 40-50 points, try and fall below the 2200 levels. But once the stock sort of safeguards this level of 2200 mark, there could be a bounce back towards 2340, 2380 for Lupin. So I would suggest to hold on to the stock as of now, since your purchase price is lower than the current market price.
All right, another question coming in right now from Pramod. He's writing about Dr. Reddy Laboratories. The quantity that he's holding is 5 stocks. His entry price is 1,300 rupees. That was his average price, actually. And he has a time horizon of 4 years. So he says, should I average it more? Should I sell it now with a loss? Rajesh, what are the fundamentals really looking like on this one?
Very strong company, I would say. Good portfolio, doing very well. The numbers have been decent. And for a long-term horizon of around 4 years, I think it's a good stock to put in one's long-term portfolio. One can even average at these prices.
Okay, let's move on. The next question is coming in from Naveen Kumar from Mysore, and the stock is Adani Power. Quantity is 350 and the entry price is 122. Okay, so he's sitting in profits, but then for how long can he hold, Kunal, and what target price?
See, I think the best part about the charts for Adani Power is that the stock has gone through a 20% correction in the last 10-12 weeks. From 240 approximately, the stock is now closer to this 200 mark. Multiple retracements have been completed, the mean reversions completed for the stock, the cool off in terms of indicators have happened. So I sense that I think it's a good price point for the stock price to try and establish a short-term base and then come back into a breakout on the upside. Since you purchased at significantly lower levels, I would suggest to hold on to the stock. Potentially, I would forecast that over the next 4 to 5 quarters, the stock can come back towards maybe even 280 to 300 plus mark. So that could open up further upside for the stock in the next say 1 to 1.5 year.
Okay, Venkat Raman from Mysore has a pretty broad-based question. Wants to know that is there a good broking share that he could buy? Rajesh, what is your sense on what stock he should pick up? And then maybe we can come to Kunal as well on this one.
See, why not BSE? Because corrected from almost 4,400 to 32, 3,300. And if a broking company is going to do well, it's obvious that exchanges are going to do well. 150 years old company trading platform in equity, debt, derivatives, mutual fund through Star Mutual Fund, international presence, 15% stake in CDSL, debt-free company. And not to forget the kind of lineup which we are witnessing in the IPO market, NSE listing happening soon. So all these are positives. Yes, there are hiccups because of cash and all, but these kind of corrections give long-term opportunities. So go for BSE.
Right, Kunal, is that what you'd pick as well?
Yeah, I think so. BSE could be one of the stocks, but I only sense that the stock is going through a phase of price correction, and it seems like that the price correction is not over for the stock price, and there could be a bit of a marginal correction which could come by. So maybe a buy on dips could be a better strategy for BSE. But if you're looking at this as a capital market space, I would sense that you can look at KPIT Tech. That could be a good high beta stock if you're okay with high risk names. Angel One, I think at sub 300 levels is something which looks extremely attractive. Motilal Oswal Financial Services had a spectacular move yesterday. So try and look at this as a stock which you can try and accumulate or buy this on corrections.
All right, I think with that, thank you so much, Rajesh and Kunal, for taking your time out and answering all our viewers' stock-specific questions today.